So very good afternoon, everybody. My name is Ryan, and I head up product and underwriting for the health line of business at Allianz Partners. It is also my privilege to chair today's session with Satish, and we also have Veli, who's joining us online as well. So hi, Veli. Maybe just give us a wave there. Perfect, fantastic. Good to have you with us as well. I'd like to begin today's session just in the appropriate manner by acknowledging the traditional custodians of the land on which we are meeting here, either virtually or physically here today. And I just want to pay my respects to their elders past and present. Now, I don't know about yourselves, but when I was growing up, I had a Labrador. And one of the things that I used to do on a daily basis is promise this Labrador that we would go for a walk. Or, if I'm completely honest, we'll go walkies. And it made my Labrador very, very happy and very excited. And there came a couple of days when I could not, unfortunately, go walkies. Now, if you ever wanted to see the most disappointed, saddest face on the face of the planet, it would be a little Labrador's face when you break a promise. Now, today we're going to be hearing a little bit more about broken promises, specifically around the general insurance space and ASIC's response to these promises that are made within the pricing space. And you're not going to be hearing anything more from my side on that arena, but we'll be hearing from Satish and Veli, and I'll just give some brief introduction to who they are. Satish is a general insurance actuary who specializes in pricing, data analytics, and risk management. Veli is a general insurance actuary who specializes in pricing, valuations, and capital management. And they are both part of Deloitte's actuarial and insurance solutions unit in Deloitte, of course. Before I hand over to Satish to join me up here in front, just want to remind you that there will not be any live questioning, so to speak, with a microphone, but I do encourage you to please use your app, and on the app you can post any questions you like, and then I'll be able to see those questions after Satish and Veli are finished their sessions. And not to quote Star Wars, but this is the way. There's no other way to ask questions in today's session, but I do encourage you to do that. So please join me in welcoming Satish for the first part of this.
Thank you, Ryan. Good afternoon, everyone. I am very excited to talk about this topic, as this topic is very close to me, as we breathed and lived on this topic for the past 2 years. The topic of today's discussion is Australian general insurer navigating through ASIC pricing promise reviews. I'm so sorry, the slide is not working. Okay, all good, thank you. That's a lot of words, right? I just wanted to explain this in a small example. Can I have a volunteer here, please? Mudit? Mudit, which car do you drive? Toyota. I love Toyota cars. That's cool. So Mudit is a very safe driver. I know Mudit is driving his car in Sydney roads. Even though he's driving in Sydney roads, Mudit is a very safe driver. He's driving this car for many years. He brought an insurance policy to cover the liability of his car. His insurer said that if no claims been made, Mudit will get a 20% discount on his renewal premium. What happened if Mudit got only 10% instead of 20%? So the insurer made a promise. Due to some system issue, the insurer were not able to provide or satisfy the promise that has been given to Mudit. Right? So that is the kind of problem that that the Australian general insurers are navigating through now. To give you the magnitude of this problem, ASIC mentioned in its report 765, the general insurers here are remediating over $815 million to 5.6 million customers. That's a huge amount, right? That's a lot of time and effort needs to put in to remediate that kind of a value. So over the past 2 years, as I said, we have helped many major general insurers on this pricing remediation journey. With that collective experience, we wanted to take you on a journey here on how these pricing developments initially begin, when and why ASIC launched the pricing promise review, and And what is the current state of the industry? What is the general insurers in the market is currently doing in terms of the pricing promise review? And more importantly, we would like to spend some time on explaining some strategies or discussing some strategies how these general insurers can avoid such issues happening in the future, right? Um, Moving on. I said pricing promise a couple of times, right, or a few more times. Before we go into a journey, I would like to talk about what is a pricing promise. So pricing promise is nothing but, to put it in a very simple way, pricing promise is a representation made by insurer that saves money to the customers. So the pricing promises can be anything. It could be, as I said in Mudit's example, it is a no-claim bonus that was being promised. Um, the other discounts are like, if you are an employee in the insurance company, you will get an employee discount, and several other discounts. Insurers are also promising the customers on a non-discount benefits as well, like cashback, gifts, etc. So now we got an understanding on what a pricing promise is. Let's begin the journey. I would like to invite Veli here to talk about how these pricing promise developments initially began. Over to you, Veli.
Now that we know what a pricing promise is, I really wanted to get into why pricing promises have become such a hot topic over the last few years, and also how developments in this area has led to ASIC launching the ASIC Pricing Practices Review. So I really wanted to start our journey overseas, particularly in the UK, where many general insurers in the UK were placed in the spotlight in the media not too long ago. So many of these insurers have reported to regulators that they have failed to deliver on their pricing promises. And one example of this could have been, for example, like Woodard receiving a 10% discount instead of 20% on the premiums. So a lot of insurers, because of this, have been undergoing various programs to remediate customers for any harm that has been done to customers in the past. And a lot of insurers have also been going through transformations to prevent these issues from happening in the future. And we've also seen insurers who've been fined as a result of these practices. So it does send a sign that we do need to think, how can we improve these practices in the future? So if you go to the next slide, there's a lot, yes, as I said, there's a lot of things going on overseas. In Australia, we've also seen similar instances happening nearby. And what we've seen over the last decade is a lot of insurers have reported to ASIC mentioning that they've also broken on their pricing promises. And given the repeated nature of these issues and the increased ongoing concern systemically across the markets, in October 2021, that's when ASIC decided to call on general insurers to review their pricing practices. And this is really to try to tackle these issues once and for all and ensure that customers are seeing the promises that they were promised. So yeah, this is really how the ASIC pricing practices review all began. And if you go to the next slide, this was the actual official announcement that was made to ASIC on this matter. And as I said, it detailed why they were launching, and it also mentioned how they expected insurers to navigate through these pricing practices. So how exactly did ASIC want insurers to go through this review? So they broken it down to 5 different phases, and these phases include the find phase, the fix phase, the repay phase, the report phase, and oversight. So I'll just go and dig a little bit deeper into each of these components. So the find phase was really about trying to identify what pricing promises were made to customers and whether they were delivered to customers. So what we found a lot of insurers did was they went and tried to find how they communicated their promises to customers, such as through PDSs, marketing materials, policy schedules. This formed the bulk of the information that insurers analyzed, and this helped them determine what was actually delivered to customers and what wasn't. So when insurers were able to identify which promises were broken, ASIC expected insurers to fix these issues to prevent them from going forward. So how insurers could have done this is try to determine what the root causes of these issues were. And then once this is known, insurers could determine an appropriate strategy to prevent these issues from going forward. This could have easily been as simple as removing a promise from the PES. Once insurers have fixed these issues, it was then on for the insurer to repay any customers that were impacted by these issues. And throughout this whole process, ASIC expected insurers to report any breaches to ASIC and how they were planning to approach this remediation. And they also required someone to be responsible for overseeing the work that's being done and sign off on the work, ensuring that the appropriate processes have been taken place to undo any harm done to customers. So we talked about why ASIC launched the review and what they expected insurers to do. What happened in the coming months following this was a lot of insurers made it into the spotlight in the media. So the media basically highlighted a lot of insurers have gone through this pricing practices review. They've identified that they have had issues with how they performed their pricing and how this communicated to customers. And insurers were going through a process of remediating the customers to undo the harm that was done. We've also seen insurers getting fined as a result of this, similar to the UK. And we've seen different insurers paying varying amounts relating to the issues that they had at hand. We've also seen in the media back in June last year, ASIC actually released a report following monitoring of insurers that were undergoing these reviews. And this actually detailed a lot of the common themes that they were seeing across the industry, where the common issues were, how insurers are progressing with the reviews, and also information on how insurers should start thinking about improving their pricing practices. So I'll pass on to Satish now, who'll give a bit of a deeper dive into where the current industry is currently at the moment. And he'll also give you some examples of what insurers did to tackle the fix and the repay phase.
Thanks, Veli. As you heard, Veli talked about 5 different phases that insurers have to undergo mandated by ASIC, right? In the industry, the insurers in the industry is currently at different phases of this pricing promise review. However, the major insurers have already completed the find and fix phase. They are somewhere between repay and oversight phase. Over the past several months, we have noticed and worked with different clients on fix and repay phase, and they have spent a lot of time and energy to fix the problems that are in their systems and processes and etc. And also spend a lot of time on finding methodologies to repay the customers. So I would like to spend a little bit more time there giving you some examples in terms of how they executed the fix and repay phase. You see here on the fix column, customer communication is something where they have focused on fixing the documentation that has been given to the customers. It's mostly simplifying them so that it is easily understandable by the customers, removing a lot of inadvertent promises in their communication. And similar things happen in the marketing material, renewal schedules, and call scripts, and etc. The other item that the insurers that we have seen focusing on is fixing their system. It could be that they have a legacy system where they are administering the policies. They are modernizing their systems into a... so that has actually given them more control over the process on issuing policies to the customers. On the other hand, during the repay phase, we have seen insurers have coming up with different methodologies to identify the impacted customers and calculating the financial detriment that has to be refunded to the customers. Um, in some cases, we have seen insurers developed infrastructure to handle customer communications, like sending them emails on what is the refund that the customer is going to get and why that customer is going to get a refund. And also they have developed this infrastructure to an extent that this infrastructure can handle the post remediation communication as well. Like in case if there are any customer complaints that coming in after the remediation, after receiving the letter or the refund, if a customer wanted to hear more about why that customer has received a refund. So those kind of customer communication or any complaints that can be easily managed through this infrastructure. So that's a lot of time, effort, and money that has been put on this pricing review, especially during the fix and repay phase. When Veli talked about, he talked about issues happening in UK, and he also walked us through the issues happening in the US, in the Australia. Now we are seeing similar themes happening in New Zealand as well. Any moment it could be a global problem, right? So the point I'm trying to make here is insurers should wake up and think about how they can avoid such issues happening in the future. So we have developed some strategies and discussed with our clients, and they felt excited about. I wanted to share a glimpse of those strategies in terms of what type of issues that we found and what is the processes and controls that can help to avoid such issues happening in the future. When we worked through various clients, we found that uplifts required in every process in the value chain. So it could be product design, it could be pricing, it could be marketing, anything in this value chain. So in the slide, you could see that there are a couple of examples that I wanted to highlight, which is product design and pricing. On the product design, what we have seen is during our review, we found siloed decision making and inadvertent pricing promises being made in the PDSs has become a huge risk. When I say siloed decision making, a decision made by a particular department or a marketing team, for example, is not being communicated to the pricing team so that it is not properly channelized. We have seen that issues happening because of that. And one of the ways to remediate this is creating a governance structure in communicating these activities internally, and also periodic product and process review. This will help insurance companies to manage or mitigate this type of risk. Another example is pricing. We have seen pricing algorithms inconsistency with representations. When I say that, there is something promised through marketing materials or policy schedules, but those promises were not properly captured in the pricing algorithm. It could be different reasons. The system could be old, it was not properly reviewed, and etc. To mitigate such risk is, I have listed quite a few things here. Appropriate checks created in the pricing algorithm itself will control this type of a risk. Another example is automating the find test. So you have a repository of PDSs sitting in one place. The algorithm automatically looks into the PDS repository and finding that there isn't any inconsistency between the promises made and the pricing algorithm. Um, there are a couple of more examples that we would like to go, which is customer service and ongoing monitoring. Given Veli had spent a lot of time on uh, developing strategies on these two topics, I would like to call Veli again to discuss about these two topics. Veli, over to you.
Thanks, Satish, for that, and thanks for deep diving into product design and pricing. So I wanted to briefly touch on customer service and ongoing monitoring before we get to the Q&A. So many insurers naturally interact with their customers on a day-to-day basis, whether it be related to sales, claim support, or just general inquiries as part of customer service. And complaints is also just, I think that would naturally come up day-to-day through the interactions as part of this. So we think that through these interactions and complaints, this could actually be an opportunity that insurers could potentially leverage to improve their pricing practices. For example, one way could be tapping into any voice calls or chat logs as part of these interactions and complaints, and then analyzing them using analytical techniques to identify any potential pricing promise issues that might arise. And this could allow insurers to proactively understand the risk and also formulate ways to mitigate these issues. Insurers could also think about proactively training their staff to identify if any concerns related to pricing promises are about to occur. And with the right governance structures, these issues can be escalated to senior management and be dealt with appropriately. Ongoing monitoring, insurers can also, a lot of insurers, what we found is there weren't many processes in place to review whether pricing promises were delivered or not prior to the ASIC pricing practices review. So we think this is an area where insurers could think about strengthening to ensure that these pricing promises, if there are red flags, something can be done about it. So as Satish has mentioned, maybe like there could be process to make sure that product has reviewed their PDSs on an annual basis to ensure that proposals are updated continuously to allow insurers to know what promises have been made. So really thinking about how we set up processes to ensure that insurers are able to see what have been promised to customers and what have been delivered or not. Given the short time that we have for this presentation, we won't delve into the other parts of the value chain which insurers can look at uplifting to improve their pricing practices. This is on marketing, system implementation, distribution, customer sales. If anyone's interested more on these topics, we're happy to feel free to reach out to Satish after this session to talk more about it, or feel free to contact us more about this if you want to know a bit more about it. But I think this is where we'll start concluding our session for today. So as part of today's session, we've gone through what a pricing promise is, why this area has been a very hot topic across many countries all over the world, what ASIC expect insurers to do as part of these pricing practices review, where the industry is currently at, and we've given some ways on how insurers can think about improving their pricing practices. So we'd really just like to thank everyone for the time to sit in and listen to the experiences that we've been going through over the last few years, and it's been a privilege to share that with you. And if anyone wants to chat more about this, yeah, as I said, feel free to reach out to Satish after this presentation or email us about it. And yeah, I think we'll pick on to Q&A from here.
Thank you, Veli. I would also like to thank Ryan for chairing this session. And I would also like to extend my thanks to Actuaries Institute to providing us an opportunity to talk about this topic. And this is an amazing infrastructure, and it is great to present under such infrastructure. Thank you, everyone. And we can open it for Q&A now.
So thank you very much, Veli and Satish. Satish, I'm going to ask you if you wouldn't mind coming to join me, if you don't mind.
Sure.
Thank you so much. I think that was a great just way of looking at where the market has come from, of course addressing what the problem has been, ASIC's response to it, and of course Veli and Satish having the unique perspective of working within a large consulting company. They have the opportunity of being able to interact with throughout the entire market and get these types of insights. And thank you again also for your call to action, so to speak, or your invitation to come have a chat to you afterwards. So that's really fantastic. Thank you.
Thank you so much.
I have a few questions on my side, but I would still encourage you again to please just pick up your app, pop down a question if you have anything for Satish and Veli. I'm sure that they would be very happy to address those in this session as well. But one question from my side at the very least, just carrying on my analogy about my Labrador, is that my Labrador usually used to give me this look as if to go, please go think about what you've done and about how you have treated me as your loyal companion. And I'd like to ask you from your experience, what have you seen within the industry, particularly around insurers, how they have future-proofed their pricing practices in response to what has been observed in the market?
That's a wonderful question. We have seen insurers simplifying their product range so that this gives us less complexity in terms of presenting it to the customers. The customers could understand the products really well and can understand what is the benefits that coming out of these products. One more thing is, we have seen insurers updating their documentation, as I mentioned earlier, like they're updating their PDSs, marketing material, and etc. First, to simplify them in a way that it is understandable. There is no additional words that could be represented as a pricing promise. For example, best price guarantee. So best price guarantee could be thought as a pricing promise in most places, right? So especially I go to office work, I carry something to them. Hey, here in this particular website, it is giving me this value, so give me price discount on that. So those kind of an interpretation can be made, but that was not intended to, right, from an insurer's perspective. Those type of corrections have been made that I have seen. One more most important item is systems. System issue have led failure in many pricing promises. What we have seen is we have seen insurers upgrading their systems. As I said earlier, they are modernizing their platforms. They have a modernized policy admin system now, which has more controls, governance structure in place that helps these insurers to avoid such issues happening in the future.
Understood, and that makes a lot of sense, Satish. Maybe if you could just explore a little bit, why did this even happen in the first place? Was it intentional, unintentional from insurers?
I don't think it is intentional. I would say it's primarily unintentional. As I said earlier, like the PDS, right? There is something that the insurer doesn't want to put into the PDS, but they have by mistake put into that, like giving some discounts, or some words that they used in the PDS were misrepresented as pricing promises. So that's a major concern. And another one is pricing algorithm, for example. Pricing algorithm did not capture the pricing promises being made, so that's another issue. In most of the pricing algorithms, they had price floors. This is the amount that they wanted to charge the customer. So in that case, what happens is, even though there was a pricing promise made that was captured in the program, so the algorithm, the price floors reverse that discounts, and so that the customers were not getting the discount that they were intended to get. On the other hand, there are some manual intervention happen that we have seen, some adjustments that has been made that eroded these pricing promises. There are several reasons to it.
Oh, of course, as always. No, thanks for that insight there, Satish.
Sounds good, thank you.
Got a question here from Craig. What level of fines were levied by ASIC in response to this? Do you have any insights on that?
Can you please repeat the question? I think this is about the fine phase, right?
Yes, it said, did ASIC levy any fines for this?
Okay.
And if so, do you know by what was the kind of quantums that were levied?
Oh yeah, I think Valley spent more time on the fine phase. Valley, do you have an insight?
So there were, from my understanding, there were fines that were in place for prior to the pricing promises, but at this stage, I'm not exactly sure what the exact amounts are. So that's something that we can look into afterwards and respond back to if that's of interest.
There we go. So, Craig, if you want to get more information on that, please come have a chat to the guys from Deloitte afterwards. I'm sure they'll be able to help and support you after that. Just a quick question from Brendan. What do you think is the most important thing actuaries should do when considering pricing promises as part of the pricing promises?
That's a good one. What we have seen here is actually played a major role when pricing a particular product, right? So what we have seen in the past, like while working with the insurers, we have seen the pricing promise definition itself is a different meaning between actuaries, underwriters, lawyers, and etc. So they interpret this word in a very, very different way. So actuaries can play a major role in explaining them this could be a pricing promise issue, and this has to be incorporated properly in the pricing algorithm, and a periodic process and pricing reviews needs to happen so that there is a connection between what is promised to the customer and what is actually priced in the product.
Understood. Fantastic. And
I'll just add a bit more to that. So I think our teacher has made a good point that pricing promises shouldn't just be taken from one point of view, should be taken from multiple points of view, from actuarial, product perspective, legal perspective, and also viewing these promises from a customer perspective. All these different points of views could result in promises having different meanings, and it's very important to make sure that the meanings are consistent and agreed upon all the different points of views. And I think this, by having that mindset, that eliminates or reduces the amount of risks that could happen in the future if everyone's aligned.
awesome.
Thank you, Valley.
Thank you both for that. And if you are keeping an eye on the chat on the app, you'll notice there that Brendan also replied to Craig's question, that there are only 2 organizations that have been fined as a result of ASIC action at this stage. So
Thank you, Brendan.
I think there's some commission coming from Deloitte's way to you for that answer and your support with the question there. I believe that's all the time we have for today, given that we have a big plenary coming straight after this, the final session, I believe, of the actuarial convention. So I'd like to thank everybody's time for coming here today, whether you be here physically in the audience or if you are coming in from home as well. Thank you so much and have a good rest of your day. And after the final plenary, please do travel safely home, wherever that might be within Australia. Thank you so much.
Thank you. Thanks, Ryan. Thank you, everyone.